You want to know what the most profitable business in American history is? It's not oil. It's not tech. It's making you want things you don't need with money you don't have to impress people who don't care. And the genius part? You signed up for it voluntarily with a smile. I've been running the numbers on something a Chinese professor named Jiang laid out, and it's the kind of thing that makes you want to pull the car over and just sit there for a minute. Because he didn't call it a recession. He didn't call it bad luck. He called it a system. A perfect system designed specifically so you never figure out you're trapped. Stay with me. Because by the end of this, you're going to see your own bank statement differently. Mike is 52, Houston, Texas, makes $82,000 a year. He just drove a brand new F-150 off the lot, crew cab, or chrome package, that deep metallic blue that looks incredible in the driveway. He took a picture of it, posted it, got 47 likes. He feels good. He feels like he's winning. He has no idea he just handcuffed himself for 72 months. That truck, base price, $54,000. With the financing package his dealer helped him with at 7.4% interest, because that's the average auto loan rate right now according to the Federal Reserve, Mike will pay $73,800 before he's done. $19,800 in interest alone. That's not a truck payment. That's a second mortgage on a vehicle that loses 20% of its value the second it leaves the lot. But here's the number nobody told Mike. At his hourly equivalent, $39 per hour, that $19,800 in interest represents 507 hours of his life, 12 and a half weeks, working, just to pay the bank for the privilege of borrowing his own future. And Mike thinks he bought a truck. He didn't buy a truck, he rented one. At full price for 6 years. Now here's where Professor Jiang's theory hits like cold water in the face. He studied something most economists refuse to touch because it's too uncomfortable. The shift, the real shift, that happened in America starting in the 1980s. Before that, the system was built around the worker, good union jobs, affordable health care, state universities that didn't require a second mortgage, the idea that if you showed up and put in the work, the system rewarded you. Then the rules changed. The new unit wasn't the worker anymore. It was the consumer. And that sounds like a small difference. It's not. A worker organizes, a worker demands. Yeah, a worker has political power because production stops without him. A consumer? A consumer competes. Competes with his neighbor. Competes with his brother-in-law. Competes with a stranger on Instagram he's never met and never will. Professor Jiang described what happens when you give a group of people money and tell them to spend it. They don't cooperate. They escalate. Everyone buys the bigger house, the newer car, posts the photos, and then borrows more to go bigger than the last photo. You end up with a room full of people who are broke, in debt, and quietly hate each other. That's not an accident. That's the architecture. Here's the math they don't put on a billboard. Right now, the average American household carries $103,358 in total debt. That's mortgages, car loans, student loans, credit cards, all of it. According to the New York Fed's 2024 Consumer Debt Report, the average American spends $1,784 per month servicing non-mortgage consumer debt. And inflation, the one nobody wants to talk about honestly, has quietly stolen 20.8 cents from every dollar you held since 2020, according to BLS CPI data. You didn't spend it, you didn't gamble it, you just held it, and the system taxed you anyway. That $100,000 you were proud of sitting in a savings account in 2020? Worth $79,200 today. In real purchasing power, you lost $20,800 while you slept. No crime committed, no one to arrest. That's just the price of playing by the rules. Meanwhile, and this is the part that should make you furious, CEO compensation went from 20 times the average worker's salary in the 1970s to 290 times today, according to the Economic Policy Institute. Same country. The same constitution, different game. Back to Mike. Let's open his budget all the way. Not the version he tells his wife, the real one. Mortgage, $1,850. F-150 payment, $643. Health insurance premium, because his company shifted costs last year, $934 per month for his family. That's $11,208 a year just to have the right to get sick. Credit card minimum payments, $380. His son's student loan cosign, $210. That's $4,017 before Mike buys a single grocery, before gas, before utilities, before anything his kids need. His take-home after taxes on $82,000 is roughly $4,890 per month. Mike has $873 of breathing room per month. One transmission, one medical bill, 1 month of bad luck, and Mike is borrowing to survive, and Mike still believes he's winning because the truck is in the driveway and the photo got 47 likes. This is what Professor Jiang identified as the perfection of the trap. Not that people are suffering, it's that they're suffering and smiling about it. They chose the cage, they decorated it, they financed the furniture inside it. A slave who knows he's a slave eventually rebels. A consumer who thinks he's free? He just upgrades the model. The wolf sees this differently, not because I'm smarter than Mike, because I asked a different question. Mike asked, "What can I afford per month?" The wolf asks, "What does this cost me in years of my life? And what does it cost me in options I'll never have?" That F-150, let's run the real scenario. If Mike had bought a reliable used truck for $18,000 cash, bond or kept his old one, and invested that $643 per month instead, I'm in a basic S&P 500 index fund at the historical average of 10.1% annual return according to Vanguard's long-term data. In 15 years, that's $267,000. Not a truck, not depreciation, not 47 likes, $267,000 in actual compounding working while you sleep wealth. That's the difference between a consumer and a builder. One buys the appearance of winning, the other builds the machinery of freedom. And here's the part that changes everything when it clicks. The banks don't care about your status, they care about your payment. They love Mike. Mike is a perfect customer. Mike works hard, borrows consistently, pays interest reliably, and never calculates the total cost. Mike will work until 68 because the math never worked in his favor. And he'll call it bad luck. The wolf doesn't give the bank a 72-month contract on his future. The wolf doesn't buy peace of mind on credit, so here are the 3 moves. Not theory. Execution. Step 1, audit the blood loss. Print every debt you carry, every single one. Right next to each one the total cost, not the monthly payment, the total you will pay if you run it to 0. Then convert that number to hours of your life at your hourly rate. Make it physical. Make it ugly. Because you cannot fight what you cannot see, and the system is counting on you keeping this number blurry. Step 2, stop buying identity. Every purchase you're about to make, ask one question before you swipe. Am I buying this because I need it or because of how it makes me look? No judgment, just honesty. Because once you see the difference between a utility purchase and a status purchase, you cannot unsee it. And that awareness alone will save you thousands this year. Step 3, redirect the weapon. Every dollar that was going to debt service the moment the debt dies. It does not go to a lifestyle upgrade. It goes to work, index funds, dividend assets, real estate fractions, things that generate cash flow while you sleep. Things the government cannot print away, things that don't depreciate in the driveway. This is what Professor Jiang's framework points to, even if he doesn't say it in these words. The only exit from the consumer trap is to stop being a consumer and start being an owner. Owners don't compete for likes. They collect checks. Mike is not the enemy. Mike is you. Mike is me at 38, if nobody had run these numbers out loud. The enemy is the quiet assumption that monthly payments are normal, that debt is just the cost of a life, that the goal is to look successful rather than be financially untouchable. Professor Jiang called consumerism the perfection of slavery because the chain is invisible and the prisoner defends it. The wolf calls it what it is, a subscription service for someone else's wealth. And you can cancel it, not all at once, but you can start today. One audit, one honest question at checkout, $1 redirected toward ownership instead of appearance. That's how the pack is built, one unchained wolf at a time. If this hit different, and if you felt that weight I'm talking about, subscribe. Help this reach the people who need it, and drop in the comments, how old were you when you first started doubting the matrix? Because the first step out of any trap is admitting you're in one, and the door's right there.